Are you a beginner trader? Are you intermediate? Are you advanced? You cannot skip a topic or ignore a topic on candlesticks. I'm bringing to your attention, guys, a discussion on candlesticks anatomy. Are they important? Do they even really matter? And if they do, which ones? 1 minute or daily chart? Daily charts or weekly charts? And how then do you relate with these time frames? How then would you go and place a trade on a 5 minute? I want to address all these questions for you guys because candlesticks, obviously, and their classifications, we have higher time frame candles and we've got lower time frame candles, and they are all important in terms of how you develop as a trader, whether you're short-term trading, whether you're a swing. So are they important? And if they do matter, to what extent? These and other tips I'm bringing to you guys here, and make sure you stay to the end. All right. Um, so let's get on to business. And before, I want you guys to smash the like button, subscribe to the channel, and share this video with your trader friends. You don't know how much effort it takes to be able to come up with such a video, guys. So I would appreciate if you guys smash the button and help out with the YouTube algorithms. So without further ado, I'm going to share, guys, with you some notes that I actually prepared or presented on Canvas. By definition, guys, what do you understand? And by the way, this is your guy, Say Marvelous, coming to your space, guys, with a discussion, with a topic that you never want to miss on candlesticks. So what are they? Candlesticks are just but anticipatory indicators that helps us determine the direction of the markets. And by the way, guys, excuse my noise. There's some background noise there because I'm in a lounge, I'm in a boardroom, and there happen to be nobody with me. It's an empty space. Hence, you hear this echo, this noise at the background. But I'm hoping that I'm audible enough for you guys, right? Candlesticks are all the same, guys. They have the opening, they have the closing. The only difference is the time frame of formation. And if that is the difference, it means if they are formed at a different time frame, it means they have a different meaning. I'm going to share, guys, with you my experience dealing with people that I meet every day as I go with my journey on Forex, the mistakes that people make, and whatever. So candlesticks helps in determining the strength of a trend. You guys already know there is situations when the market is not moving in a downtrend or uptrend when it's ranging, or the situation when the market is in a trend, it's trending either downside or upside. And it's all the courage or the power of a trend to continue. It's shown in the candlesticks. I'm so stoked, guys, to bring this to you. Make sure you engage me in the chat box. If you ever find me talking too much and not bringing you value, make sure you ask me in the chat box a question. I'll be happy to assist you. So, like I said here, guys, candlesticks are the same. The only difference is the time frame of formation. They all have the opening and the closing. And I hope you guys can see this right here. I don't want that section. You guys can see right there. The wicks, there's the body, then there is the wick. Some people call them the kangaroo tail or the wick. Then the body is this solid part. What does it mean when you see this wick? There's two things obviously involved, and some of this I will explain in detail as I go on the charts. I'll explain in detail as I go on the charts. So stay tuned, guys, as I will talk about the wicks, their meaning, their relevance when I get to the charts. you guys can see if it's a bullish candle, these are the candles going up. I always give an example of a bullfight. Have you guys noticed or experienced or seen a bullfight? The bull is always fighting, lifting its head up. That explains the bullishness. I think the Forex market or the Forex, whoever, they took that from how the bulls react when in a fight. They lift their head up. That's bullishness. And the bear animal, if you know the bear animal, guys, is walking, pretty much his head is below. So that's the bearishness of the market. So any candle going up is bullish. And because a candle is moving from the bottom going up, the opening has to be below and the closing price has to be above, like in this case. And then there's the body. The body has got some relevance. How big is the body in relation to the wick? It tells us who is dominant in that time frame. And you can give it, you can, trust me, you can determine how much, or even on a percentage, how much is the buyers against the sellers, just to try and observe who is more dominant. I hope I'm not I'm talking to somebody there. I hope I'm talking to somebody. And even the bearish candle is the same meaning, right? But let's move on. Let's move on. I've got a quote for you guys there. I've got a quote for you guys there, and I hope you live by this. Don't just be a Forex trader, guys, but rather be a project manager, and your task is a one-sentence job description, which is follow your plan. And I wish you all the best, guys. I wish you all the peeps. I wish you everything that you ever deserve in this journey. Hence, I'm even bringing this topic on candlesticks because I know it's so crucial. So make sure you walk with this path with me. And I'm literally there to hold you by the hand and share with you guys what I know. Now, moving on, in this presentation, you are going to learn how to use candlesticks, conformations to avoid stop outs, right? You're going to understand the relationship between a level of interest and candlestick patterns, right? And because I say to you guys at the beginning of the video that the candlesticks helps us determine the direction of the market, it means also that there are some footprints of the big boys based on certain candlesticks and price. Obviously, a level, this is now talking about a certain level that the candlesticks is being formed and the time frame, that relationship. It gives us a clue of where the big boys, of where the higher, where there's so much liquidity and even volatility in the market. And you know, volatility is your friend. We can always identify areas of high volatility in the market based on types of candlesticks and even the reaction of candlesticks based on that levels. Oh, it's becoming interesting. And I'll talk about this in detail when I share my screen, right? Now, another thing that you're going to take away from this video is understand that it's not only the last price that's important. I'm talking about the wicks. Sometimes what could be important on a candlestick is the body where the price closed, right? Another point, how to relate and effectively mark your points of interest based on the bodies and the wicks, right? Now, let's look at a few examples from the charts. Obviously, I've got with me some charts that I marked here. And I know that you might not really pick everything on this, but I'll try by all means to make sure you guys are with me. I'll try and make sure that you guys understand my points. Now, if you guys notice, I'm on a daily candle of GBP Swiss franc, which is Great British Pound, and the Swiss franc. And what do you guys notice here where my cursor is? There is a double top, right? Which is an area with the same with some equal price levels, double top. And one thing that's interesting for me is these candlesticks, this bearish engulfing candle, this bearish engulfing candle. What it simply means, guys, is there has been a noticeable price movement to the upside, and we can count 1, 2, 3 days of movement upside. But all of a sudden, all this effort of the buyers to push prices higher is countered, is taken obviously away just by one candle. How insane is that? That's a clue, guys, that some force are in this market, that some higher people, some market movers are moving price and they are crushing all efforts to go in a certain direction. And that is shown with this type of candle. And another tip that I want to leave you guys with is this. It's always very, very important to notice or to note that you can be smart. You can outsmart these markets, right? You can do that. Trust me. You can do that. What do I mean by that? There is a topic on one of my slides when I spoke about making two out of one. It's a powerful way of viewing candlesticks. And by that I mean, if you can take this bearish engulfing candle and see this next candle there, these candles are pretty much or almost sharing the same closing and the opening. And you can combine these two to make one. I'll show you guys in another example. Like, check this one. We also have got a bearish engulfing candle here. After all this time pushing high, there's a bearish engulfing. And if you guys can see, the closing and the opening of these candles are almost the same. And we can connect all these and make one candle, which is something that I'll talk about or I spoke about in the next slides. But to I want you guys to bring your attention to this zone, because we have gotten a bearish engulfing candle. The length of that candle altogether is bearishness, is bear territory. Are you guys with me there? And you can see price dipped into that. And obviously, for some days, we have been there, right? But not that much. We couldn't even have the solid candles, something full candles within this bearish engulfing. In particular, these two. Do you guys see these two? In textbooks, these are called spinning tops, and it's a reversal candlestick pattern when you see it forming. And now, the most important thing is where they are formed. Remember, I said sometimes it's a matter of where it's formed, and it's now formed in a territory of sellers, in a bear territory, from that engulfing candle. What am I doing here, guys? I'm just looking to the left to make a right decision. So whatever happened in history is going to make me help me decide on what's happening next. Today has been made out of history, guys, right? And we always look left to project or to anticipate future price movement. And they say each day by each day builds on the day before. So this particular month builds on this particular on the previous month. So if that is true, or if that is correct, it means all this has been bear territory. And we need to look for those sell opportunities in this zone. When I say this break, the full body breakouts after going up 2-3 days, then this candle coming to close above, that's for me is a signal to sell. And you guys can see the market dropped 3 days. big time sells. But as we got here now, you remember, guys, this slide, when I shared with you guys what you will learn from this presentation, I said you are going to learn how to effectively mark your points of interest based on the bodies and weeks, right? And also I said, understand that it's not only the last price that's important. In other words, the wicks. And this is what I'm trying to explain to you guys here. Notice how I took not the lowest price that the wick gave us, but I took this particular level. When I look at this, bodies sitting on the same zone, the 120 something there, right? And obviously, this also two bodies sitting right there. So that for me will be the level that I'm interested in. And it is also from this same level that I saw a bullish engulfing candle. Here, right here. You guys can see these bodies, these candles, 1, 2, 3, 4, they are sharing the same base. They are sitting on the same level ground. And from there, we see a bearish engulfing candle. Another thing, guys, if these candlesticks are very important, they will help you. They will make you see what others are not seeing as long as you appreciate and use them effectively. And I'm going to give you guys a tip. If you see this bearish engulfing candle, and you guys obviously see the next candles are bullish, and even the third one was bullish before it closed for the day. Now, if the market is bullish from this point to this point, bullish engulfing, and we happen to dip into that, like when we're dropping from this bearish engulfing zone, we tapped below that, and we actually took out that back. It's like this has been a buying territory, right? But the sellers took over. In as much as we see this candle in the middle as bullish, it just yes, but clue that the buyers were there. The buyers were there, but we couldn't see them close above the length of that, which is the length that I even spoke about on the previous example. If you look here to the left, now that area is now broken. You see this bullish candle that I've marked there? That's the one I'm talking about. And I wonder why. Okay, because of the bullish candle that I've highlighted there, right? This bullish candle that I've highlighted there, I want to make sure that I, yes, it's gonna be full screen, right? Because of the bullish engulfing candle that I've highlighted here, right? Buyers are present. Hence, you see the buyers from there. Hence, you see, because of this bullish engulfing, it means buyers were present, and we see them here, right? But to what extent? We can see that they were short-lived. They couldn't even go above the previous high. Remember, it's a daily chart. And after that, we see a candle. They're sharing the same base, which is something that you should pay attention to. And this candle breaks the whole thing down, and it breaks the 1.201 there, a level that I have marked it as my support. Now, this candle breaks everything. That's a signal that sellers are powerful. They are in the market. And see how big of a drop is that? Life-changing, guys, right? Now, another slide, trading. It's a quote. Oh, I love that. It's a quote, and it says, trading is the best way to avoid dealing with people directly. Are you an introvert? You don't want to deal with people. You can be dealing with these candlesticks. And I want you guys to give you how to build a relationship with these candles so you understand each other's language and you can manipulate them to your advantage, right? So obviously, I'll give you guys a tip, a bonus tip, and on how to make 1 out of 2 approach. And I think that's the next slide I'm going to, right? Slide number 8. Now, pay close attention to this one. Pay closer attention to this one. Because obviously, I'm giving you guys a rough a breakdown of this, and I will share also the MT4, and I will share in real charts, right? Now, see this thing here. We have had a situation where we break the highs of this day. Remember, it's a 1 hour chart right there on the top of my screen. So on the new day, we see price rallying above the previous high, right? With a solid bullish candle. And if you guys remember what I said in the beginning, some candles like this one, they are so they are so bullish. The the bodies are so big in compared to the wicks, which means there was little to no rejection. So 95% this time around, if it's a monthly, it's a daily, it's a 1 hour, it means in that hour, 90% of the times, the buyers have been pushing high, which means it can give you a clue to say that they are not going down anytime soon. Now, if you see this happen, a nice break above all these levels candle that is shortly countered. And in as much as this didn't give you guys a bearish engulfing candle, you can make one, which is what I'm trying to say here. Bonus tip, make 1 out of 2 approach. You need to be smart. You need to see things that the next guy is not seeing, right? And you can see the bodies, the closing prices are almost the same. Don't mind where the price went to as shown by the wicks, but the bodies, the closing of this is the opening of this. The closing of this is the opening of this. And even the opening of this is the closing of this candle. So we can make a bullish or a bearish, in this case, a bearish engulfing candle out of this, right? We can connect these and make a bearish engulfing. And like I said previously, if that is a bearish engulfing candle for you, and we happen to see price dropping like it did here, right? Let me see, like it did here. This has to continue dropping to validate the bearish engulfing candle that we would have seen. But the moment we tap back into that bearish engulfing, it means it's like we have invaded the bear, the bears have got dominance in their sphere of influence. And that sphere of influence, the buyers came in and overtook it back and took it back. It means the buyers or the sellers have lost their strength. And if you see this bearish engulfing candle giving us some sells, and all of a sudden we see a turn of events, a change in market direction, where we see the buyers coming back and takes out all that bearish engulfing. That's a clue. That's the first sign. It could be in a distance, it could not be closer to you, but that's the first signals you need to be looking at, right? I hope I'm talking to you guys. If not, please share a comment, ask me, and I will try to help you guys understand what I'm trying to say. Now, look at this next example, which is what I want to share with you guys and help you better understand what I'm saying. This is it. Okay, just a second. Um, oh, let me do like like this. Okay, okay, okay. Now, you guys have seen that bearish engulfing candle that we have made, which means this is a 1 hour chart and we happen to make our, oh, This has been the bearish engulfing candle. On a 4 hour, we have this bearish engulfing candle, right? And obviously, we see some sellers coming in the market, but later on, with the buyers took over that, which is what we see here, the bull rally. And yes, we see some sellers coming in. It's in their zone, so they are bound to do this. Now, the next thing that we notice, the markets breaking that bearish engulfing, it means the buyers are now present. I hope you guys see what I'm trying to say there. Now, moving on, still on this chart, when the market leaves a week and fills it back, it probably means the buyers or the sellers regained what they previously lost. What do I mean by that? I want you guys to bring your attention to this picture here. And obviously, I took this trade myself. I took this trade on GBP JPY. It's one of my favorite now. I saw that we have had some sellers, some sellers pushing prices to this point, but they were later countered. The buyers came in. The buyers came in. And later on, we came back and filled that tail, which could be a sign that the sellers are pushing prices lower. And you guys can see that week is being broken and retested, and then price went below. That was my entry there to sell. But obviously, later on, this market turned back to be a buy market, and I bought also because the market failed. These sellers, they failed to keep on holding the price. And I also bought something somewhere around this area again. All right. Take time to, read this and obviously relate to what I'm saying. All right. Now, let's move on. Attention, guys. There is what we call fulfillment of a higher time frame perspective. By that I mean, for a big movement to occur, everything starts from a small time frame. Like even your 1 minute. And to better understand or appreciate this, you have to understand the market structures formed on lower time frames so that you can notice the turning points for a move that occurs later on a bigger time frame. In other words, if you meet somebody who is 40 years, 50 years, that person was once 1 year. So if you see a bullish move on a 4 hour chart or daily chart, you have to understand that its roots are on the 1 minute charts, 5 minute charts. So understanding the structures of the smaller time frames helps you identify or see these turning points. And you guys, from that explanation alone, you can see how important understanding structures, and even when you understand candles, it helps you in stop loss placements. And in simple terms, your small time frame candlesticks build up to form the high time frame candlesticks. That's self-explanatory right there, right? Now, another example, I love this one because it will help you then understand better. But before I continue with this one, let me share my screen in a second. I'll share another screen there with you guys on the MT4. I know that I will see something that I'll share with you. Yeah, right there. Do you guys notice this on a chart? This is the area that I might mark. Maybe I would use, obviously, I would use the line charts, and I'm taking into account that lowest point from there. Because if you check this month and this month and this month, there's been 3 times we dipped into this level. So I would say this is a common area or in a central key level of interest in all these months. So I won't go and take this lowest as my point of interest. Neither will I take this as my only point of interest. Or will I take this as my point of interest? Sometimes it's not where price went to and by the week, because the week is a sign of rejection. It's a sign of rejection, signs of rejection. And if you understand me to this point, you know that if we have this, it means there has been sellers pushing prices lower during formation of this candle daily chart, but that was later countered. We saw buyers coming in. So who is dominating this zone? Do you guys have my answer there? Are they sellers? Are they buyers? Comment on the chat box. And I know I obviously know which one you are referring to. Now, if I mark this as my central point of interest, and on that level, I see something like this, that's a sign, that's a clue that the buyers are now back in the markets after this whole drop. The buyers are now present. And these candlesticks, they are not important just anywhere on the chart. They're important, especially when they form on key levels of interest, which is this one. And the other point of interest that I would take is through connecting the extreme tops. And one thing for sure that you guys can notice is been from here, price you used to sell. From this point, it used to sell. From this point, there was a sell, which means this area, if we took it like that, we have seen sellers, we expect also to see sellers here, right? But if they don't come, obviously on small time frames like your 1 minute, your 5 minute, during this day's course, there's a time we saw some drops from here, some market movement moving down in respect of the sellers that were present here previously. But now we have a bullish candle, bullish engulfing candle, and a full body breakout of our zone. So the whole month price has been trying to break this level to cross to the other side, but failing. But now they are coming as a bullish engulfing, and you guys can see we overlap the previous sell territory or the sell zone with a full body breakout, full might. The buyers are just not backing down yet, and it's all this is happening because price is moving from the central point that we have highlighted there. So I'll take this area as one, and I won't take all these extreme lows, but I will accommodate this to be my points of interest. And it's a double bottom here, it was a triple bottom here. So anytime you look for big sells, is below this. As long as the market is above, it's more looking bullish. You need to be looking for bull signals. And because we are so smart, and I want you guys to understand this, if I ask you who has been dominant here, I say it's sellers because you can see price pushing lower. Now, if you take the same area and extend it to where you are, remember, it's a matter of looking left for you to be right. So if this was a sell territory, you guys can see already that sellers do came in there and gave us, I think, 126 pips, pretty much decent pips for the day. But that didn't go anyway, and you can see at the close of the day, price rejected and gave us, that's a rejection, a big fat rejection right there. Which means the sellers were present, they pushed the price lower, but the buyers came in and the sellers were rejected right there, right there. And where do we come back to? To take out this. It's typical market movement, structures of the market movement. And when it's forming an uptrend, lower, higher, high, lower, high, higher, high, lower, high, higher, high, lower, high. A higher, that's higher, right there. You guys see that? Simple price. I hope you guys are picking this. I hope you guys are really, 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 really picking this. And in as much as I might not really address issues that you have in one video, make sure you commit to sticking to this channel throughout. So anytime I come in, you grab something, you learn something, and you ask me, I'll do my justice to help. I'll do justice and answer each and everybody's question. So engage me, guys. You guys can see we have a double top, right? Obviously, this reaction is just but in respect of this sell territory, and we happen to break that, a full body break again. But the market won't move up in a straight line as much as it wanted to come back here. It doesn't. It has to retrace. That's the retracement, and we saw the market pushing, shooting high. Now, this area has been a sell zone. Anytime price was there, we've seen sells. And now because we have been, this is the level that gave us all this. All this is coming from this point. So we expect at least some sellers. And that has been almost 10 days, almost 12 days of market moving down. But you guys can notice that this is a clear sign that the sellers are not having it on this zone. We are in an uptrend. And to classify that the uptrend is still valid, or let me remove some of these lines so that you guys see what I really intend to share. If the uptrend is still very valid, it means we don't have to close below this structure there. And obviously, all this is happening, the drop is happening because obviously price is coming from this extreme sell territory, sell zone, sell liquidity area. And yes, the sellers do, we can see them, we confirmed them, and they push the price low. In as much as the sellers pushed the price this far, and during formation, obviously, this was a solid candle, but short-lived. It means we don't have to close below this to validate this. If you look to your left, it has to be valid. And we closed a body. There's little to know. It's a doji, right? A reversal candlestick pattern. And it means the sellers are not having it. We have buying pressure that rejected all this. And that's a rejection of how many pips? 126 pips, guys. So you might have took a sell, and also on the way back, you took some buys, and it's a bang, it's a winner. And that's a sign that you have respected this beautifully. And you see, the market from this point, it has to break one, it has to break number two, and it did just that. And before it came to kiss goodbye, to say goodbye, a retracement, and boom, upside move, good number of pips, obviously. Oh, 240 pips. And what else do we see there? The candlesticks, they're still very important. This candle and this candle forming on your points of interest. So it's not like every candle within this is important, but those particular candles forming at points of interest. So it's important to be able to mark zones first. And when you mark the zones, you want to observe the types of candlesticks forming on these zones. Are you guys with me so far? If yes, I appreciate you guys taking your time to be with me this far and listening. You guys are different, you guys are special, and I appreciate the support. Now, you guys have seen that the market just moved higher and higher and higher and higher. This is life-changing. If you can catch this, 2,400 pips from guys, this is life-changing money. And if you don't trade GBP JPY and you want my recommendation of a pair, if you're a beginner intermediate guy, GBP JPY is a good pair, USD JPY is a good pair. And if you want to hear my opinion on these pairs, that's the one I trade every single time, and I teach this at the office. You know, it's just a good pay. Just a good pay, guys. It pays well also. Now, I think I've explained something to somebody. And the same example that we spoke about on the call, you guys remember that? Bullish, bearish engulfing candle that we see there. It means we try to push high, but all that is countered. And from there, all this territory is a territory for sellers. And we just tapped back into it. And what do we notice? A body breakout candle, that one. And see how massive of a drop that came from there. Wow, interesting. Now, back to the, oh, I said stop share, right? I hope I didn't cancel the whole video. So let me share again. I'll say share, and then I'll take this one. Yeah. I hope I'm still recording, eh? Now, again, the same example is coming back again. Who says, no, repetition is the mother of skill, and I want to help you guys understand this better. The same bullish territory, B is territory, so it means if not broken, sellers are still dominant. In as much as price is into this territory now, it's still but a seller's zone. Now, see that doji candle, a rejection and a reversal candle. That doji here. See, we've got this bearish zone, like I've identified, and notice how we see price pushing higher, but they rejected on this bear territory to give us a doji. Some would say a gravestone doji there. And also there, they're giving us another candlestick pattern of 1, 2, 3, which is an evening star or a morning star. I don't know, really understand if it's, but I think it's a more evening star. 3 candles, bullish, another small candle in the middle, and this one. Where is it forming? Right on this level where we have our bearish engulfing candle, which gives us a zone of sellers. And also, there's a chart pattern that we see right there in black. Is a market moving in a channel, a diagonal channel. So the moment we break that channel and retest, you guys, how many confluence do we have right there? How many confluence do you guys see on this page number 11? I want you to pause and read this and understand what is there. And if possible, you can just mark page number 11 and comment if you understand something on it. If not, I will explain to you guys also in the next on other upcoming videos. And see big cells. All right, let's move on. Oh, what a beautiful message. Now, if you have made it this far, guys, I appreciate you. And I want to say this. Always stay calm, think clearly, and move with a strategy, not with emotions. And in part of building your strategy, guys, you can utilize candlesticks. You cannot do it without candlesticks because that's the language of the market. And ultimately, trading is in the story that you can tell. That story has to make sense for you, and you can always build it up. I love you guys, and I appreciate you guys' support. Now, how to use candlesticks to avoid stop outs. Only enter price after a clear confirmation, especially the higher time frame candlesticks confirmation. And also learn how to use the Fibonacci and only trade when price reaches a key level. So you don't approach price from candlestick to candlestick analysis, but you understand zone to zone type of approach. I don't know if you guys really understand what I'm trying to say. So I will still go on and talk about candlesticks on another video, but the next presentation that's coming, I'm going to relate now the zones of a Fibonacci, right? And I'll also discuss more in detail how to spot your entries based on candlesticks. So make sure you don't miss that next video. I appreciate you guys all for taking your time and thank you for watching. Goodbye.